So as we said there, the falling oil price is a big factor here, and it goes beyond Russia. Yes, OPEC members have said they can live with lower oil prices, but the impact on stock markets has been pretty devastating. In the last 3 months, look at these ones: Saudi Arabia, Dubai and Qatar. They have entered into what we call a bear market territory. That is stocks which are down more than 20%. Dubai, the real standout there, in two ways, because it was the world's biggest performing market this year and is now down 40%. Well, joining me via Skype from Houston, Texas this week is Ghassan Jahayeb. He is the Chief Investment Officer of Dubai-based Sancta Capital Group. Ghassan, Middle East, especially Gulf markets, can actually be volatile beasts anyway. Is this just more of that, or are we seeing some sort of major correction here, do you think?
Kamal, this is the result of a lot of speculative excess that's run up over the last 12 months, really. And then there was essentially a trigger that caused it all to crack, and that was oil prices retracting. But essentially, the markets will stay volatile for quite some time, in my opinion. There's still a lot of margin in the system. UAE-based investors and the whole, a lot of the volumes in the system are based on retail investors. So, the big difference between a lot of the Middle Eastern markets and the U.S. markets is that the Middle Eastern markets are very retail-driven, and that's definitely the case in the UAE, for example, where about 90% of volumes are driven by retail, sentiment-driven, emotional investors who can really throw stocks, like a baby out of the bathwater in very bad times and into very deeply undervalued levels, and then move them up into bubble territory and in times of optimism as well.
And what do you make of the idea that the UAE reckons it can live with $40 a barrel oil? That doesn't, it seems a big call, put it that way.
They can do it, but only for a finite amount of time, maybe 3-4 years at the most. But certainly they won't. They don't intend to do it for that long. I think this is just their strategy of rationalizing global production and supply in the markets, and there's probably some serious geopolitical intentions behind it as well. And the intent is to, I think, maintain that keep the taps on for at least 6 to 12 months to rationalize supply and achieve these geopolitical objectives, and then policy will be kind of revisited at that time between mostly the GCC members. But yes, certainly, the UAE has over $700 billion worth of sovereign wealth and FX reserves. Same with Saudi Arabia. Kuwait has significant amounts as well. So they can ride out the storm for a significant amount of time if need be. And this is definitely a rainy day, and that's what they prepared their coffers for. So, these guys are intent, I think, on maintaining supply the way they have and the way they announced in late November until they rationalize supply in the market and they achieve the objectives.
We focus mainly on the UAE, but this has been a regional thing. I was interested to see that the Egyptian market actually, that got hammered. Obviously, Egypt is in the natural gas game more than oil, but does this just show you how nervous investors are, that the Egyptian market can get hit as well over the oil price?
Certainly. I think, there's a few reasons behind that, Kamal. First of all, Egypt, does not have a currency that's pegged to the dollar like the GCC states. And given that, investors are seeking a flight to safety into U.S. dollar denominated currencies, any currency, any market that is denominated in a non-pegged currency like that is going to get shaken up. Secondly, Egypt has depended significantly on the GCC states for funding over the last, year or so. Since Sisi has come into power, and that's over $20 billion worth of aid. And this is coming from very oil-rich nations that have just seen the price of oil get cut in half. So there's reasons, for investors to be concerned about maybe potential future support to Egypt. I think it will be unwavering for a good amount of time. However, that's definitely sent jitters into the market. And third of all, we are in a time, just more generally and stepping back, of very, very heightened geopolitical tensions and also an emerging markets currency crisis. We're having currencies across Africa, Latin America, Eastern Europe that are collapsing at this point in time, and people are getting very, very nervous. So EM is a very hated asset class at this point in time.
So if you're a Middle Eastern investor right now, what do you do? Do you just have to ride this out? My first observation to you is that these are volatile markets anyway. Do you just have to ride it out again, or is this a major correction to adjust to if oil is going to go down and stay down this low?
It is our team's opinion that this is a temporary low in oil and that the market will rationalize itself. Supply and demand will reach equilibrium eventually. There's supply glut in the market, and that will fix itself eventually, and that is the intent. OPEC does not intend to act as a swing producer again and wants the market to naturally balance out. What's taken oil from $115 to slightly under 60 recently also has to do with a lot of financial speculators. And I think that these guys are getting margin calls and pushing down the market as well. So the point is that towards the second half of next year, our base case is that oil will stabilize and start to clear anywhere between $65 to $80 again. And that is bullish for any investor in the GCC and also Egypt. There's a lot of great companies that are trading at very attractive valuations right now, and there's still some that are still trading at expensive valuations. So we've seen quite a correction, but some markets are now just at fair value while others are looking attractive. But one thing to note again is that there was a big run-up that was fueled by a lot of speculation, investors pumping up things on margin, a lot of IPOs that shouldn't have been bought up that were. So we're now seeing a natural correction of that.
Ghassan Chahayeb, a pleasure talking to you on Counting the Cost. Thanks for joining us.